Good morning.
Good morning, Harlan. You enjoying the show today?
Hey, I sure am.
Yeah,
No complaints.
I guess we're taking a little dip here in the IQ category, huh?
Pretty much.
Yeah, I know you can take a joke, Harlan. How you doing this morning?
No complaints. No complaints. I mean, a little cold here in Wisconsin, but what else is new? This is winter. If you don't like it, you can leave.
Yep, that's
But
same thing here yesterday. We had some snow, and I was almost one of the rookies that bit the dust on the first day of snow. But I
oh no.
survived. Well, let's go to the S&Ps here, Harlan, and we are showing some weakness here this morning. I'm sure what's really driving us here. That I know we really didn't like that 8:30 data number that came out. Now we're trading on the lows from Tuesday and Wednesday here. Looking into your crystal ball here, is it we're gonna find some support here and go right back up to that 2050 level, or do we got some work to do on the downside?
Well, isn't that really the question? Where's support? That's what I always ask myself because I'm a support guy. I'm looking to buy support, sell resistance, and when I watch the dailies, I'm looking at what we saw yesterday, or actually the day before. Line up your tops from like July on the S&P on a
Okay.
daily chart, and you can see we're clawed right up against the resistance line. So it hasn't been an exactly easy past couple of days. A lot of churning, a lot of chop fest in individual issues. So it seems like it's more of the indexes that have been doing the driving per se. But underneath the surface, there has been a lot of slop in a lot of individual names. So for me, where's support? That's what I want to know. I can draw a line right across 2020 because that's the old breakout. So that becomes rule of thumb. Old resistance once broken tends to become new support. So I'd be looking at that 2020 over time. But there's something at around 2030, I think it was, about
Yeah.
4 or 5 days ago.
Yep. Yep.
hmm
Yep.
So there's another level. What's also equally interesting is if you throw the 20-day moving average, it's coming up pretty quick. It's almost right now. I have the 20-day simple at 2015. So remember, each day we stick up here, that moving average keeps creeping higher. So 2020, in a couple of days, you could have a tag of that support, and the 20-day probably catches up to it. So those are some levels that you'll want to watch for.
Are you more like, let's say, if you're looking to short, are you more looking to see something rally back up, hit a resistance point, and stall, or are you more willing to whack something going through like triple bottoms or quadruple bottoms?
I'm more interested in when an issue goes right up to resistance. I need to see not only that resistance tagged, but I need to see resistance defended, much like support. You hit a support level, you bounce, and you come back and you take a look at it one more time. Those are the best trades for me, is to see an actual support or resistance defended. It actually, instead of an initial tag, you can clearly see that it just doesn't want to go there. It's kind of like what you and I talk about, stabilization.
Right,
Same
and
thing.
we had J.C. Peretz in the office a couple weeks ago talking about his method of a technical analysis where he likes to see a level hold, 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 and then get taken out, and then kind of
Yep.
shift the momentum, and then it comes back. I'm talking on the support side here. Then it comes back above that level, gets his ground, and what he likes about that is, well, wherever the low was on the washout, that's your stop out point. It's defined risk, and I think Scott Redler, who was on yesterday, kind of echoes the same thing. He actually coined a name for his the red dog reversal. But everyone kind of has their same names and their same methods, but a lot of times they turn out to be the same. So is there anything
Right.
here that gotta? I mean, because now SPOOs are down 9, so let's theoretically say we're going to have a red day. Is there anything that's kind of and I think you call it what, a snap back rally and a channel or something like that? That's one of your terms. Do you have
Yes, it is.
anything that fits that bill?
Not currently. Not currently. Um, I can say, well, let's pull up Tesla. Let's look at a big chart of
Oh,
Tesla.
that's a great one. Okay.
Yeah, that's a great chart, actually, because there's so much technical things going on
Point them
with
out to us,
that chart.
please.
Go back to May,
Okay.
6 months, 7 months, and I think if you can see anything that jumps out at you there, really big picture.
In May here, let me pull it up.
No, just overall. Just look at the big picture overall chart.
2.25.
Nope. Even well, actually, let's go back to from your April. There it is. That might be it. Kind of not.
240.
Yeah, I've got a bigger picture chart. You could sit there. Well, I'm looking at this. You're on a weekly. Can you go to a daily?
Yep. I'll go to a daily here, and then I'll need to do a little shift in here to get back to May, and I need more data to get back today. So I'm gonna go year to date. Ooh.
Well, while you're doing that,
go ahead, Harlan.
yeah, now he's on the monthlies. By the time you see it show up on a monthly, it's already made a huge move.
This is year to date. Year to date, Harlan. Here's your move in May, right there.
Well, just overall, starting from May through present date. There it is. Stay there.
Okay. Not
touching
it.
All right. Can you see anything? Oh, now he moves it. You're a danger to yourself, Joel.
What am I doing? Give us a level already, Harlan. You're killing me.
From May through current day.
My chart won't do all that without.
Yeah, it will. Keep going. All right. So the big picture is when you look at a 6-month chart of Tesla, you can see that snapback rally that we've just seen. You can't see it on Joel's chart because he's back in May, but you bring it forward to present day, and you'll see this big snapback rally, and that's all we've done. And when you look at a 6-month chart, you can see a really big head and shoulders top on Tesla. So snapback rally is the right shoulder, but you also have a trend channel showing up here. And Joel's almost there, folks. This whole piece off the October lows, one could say this is a big snapback rally trend channel. So if you line up your tops, that's resistance, and you line up your bottoms here, that's support, that's trend channel support. It's also, in a bigger picture sense, it's also a head and shoulders top, the right shoulder of a head and shoulders top. So for this issue, until it can break, if you line up your lows, until it can break the lows, it's still in a snapback rally short trend channel. So that's one that I've been watching for quite some time. There you can kind of see it there. You can kind of see the July funk, if you will. Could be that's your left shoulder. Obviously, the 275 plus is your head. Mm-hmm. And, here you go. You're snapping back up here. Gap has the same thing, GPS, but, here we go, earnings. So that could negate the whole pattern.
You know what? That is a nice looking chart here. Is this something that you try and trade with small lots? You try and utilize it in the option markets? How do you trade it?
I'm just more of a keep it simple, stupid type of guy, and I just short the stock versus getting all fancy with options.
Right. Yeah, you're right. Good.
Too many cooks spoil the broth for me.
Okay. Let's start moving on. Some of the other momos that we'd like to touch on with you. So let's start with Apple. And boy, that thing is just chugged higher. Found some resistance here, and I'm sure you're going to say there's nothing you can find bad to say about Apple, but I would just say you got a double top there. Maybe people will be leaning on that. Comments on Apple?
Extended. Very extended. I mean, where's the nearest support level? 20-day moving average is hanging around 109. And if you look at that stuff just below 110, you can see we consolidated, between the 107.5 level and 110 for about a week or two. So that's your nearest support level. But remember, Apple is a huge driver of all indexes. And, the last couple of days that Apple was going vertical, that also allowed the indexes to catch a bid because it's a heavily weighted stock. If I'm not mistaken, it's 8% of the NASDAQ. And I think on the Qs, it's 13%? I don't have the exact numbers because I know they changed it at one time. But when you have a stock that is that heavily weighted, it does have an impact on the indexes.
Because they just got to own it, right? And in order to keep it up as a proportion in their portfolio, right? Then they just got to keep buying
Well,
them.
yes, that's part of it. The other part is, you know, think about it. Why don't we just run the top 5 names in the NASDAQ and then just kill everything underneath? The NASDAQ will look flat because you're taking the highest weighted names that make up the index, and it'll give the impression on the headline that says, you know what, this looks pretty decent here. The market looks pretty good, but when you look underneath the surface, lift up the hood of that car on the showroom floor, you'll find it's not running on all cylinders. So I see that happen a lot. The 2 names that they like to play games with a lot are Apple and Google because they make up such a huge percentage. So, for me, when I see Apple, I'm going, all right, where's support? If I want to buy Apple, I'm not buying it up here, not after it's just ran from 102 to 117 in a short period of time. So I'm looking for support. I'm going, all right, there's some support at 110. So talk to me at 110. If it goes there, great. If it doesn't, I'm not going to take the trade.
Let's talk.
That 110 is support, and that defines my risk. If I'm buying it right here, that 110 being a support, that defines my risk, meaning if I'm in, the fluctuation risk is it can go right down to 110 and still have its trend be intact.
Okay, S&P futures just made a new low here at 2035 and a quarter. That coincides with the low that we have on Tuesday, trying to recover here a little bit. Actually, Tuesday's low was 35.75. We'll see if we get a rebound from this level. Let's talk a little bit of Google here. And this stock has just been a dog. I mean, since earlier in the year when it made its all-time high, I believe at 1228.44. Then you had the split. Not sure what was really accomplished by that. And now I remember talking to you about it last week, and you had identified a support point at the 538 level. Looks like that's taken out. I mean, looking at the chart here on the daily of Goog, I mean, that looks like kind of like a snapback rally in a bear channel that failed here. Could we head it back down to 500 in Google?
Well, you could. You can do anything you want. Actually, I mean, 500 is probably going to get bought because this name, too, is a huge index component. So keep that in mind. And for me, though, if you line up your tops off of the September highs, just line them up. It came right up to downtrend resistance, and it started to turn tail. But by the same token, look at what this thing has been doing. It's, off its recent peak at 560-ish, it's a A down, little bit of 2-3 day bounce for B up, and here you are in C down. If you line up your lows of this little pullback off highs off the 560, yesterday it tagged that little trend channel support and instantly got a bounce, put on like 7 points in a heartbeat. So one could say, this is an interesting name. You want to see where support is. Ultimately, yes, it can come right back down to retest the October lows. Just think of Amazon when it hit lows, and then, a couple months later here came right back, retested the lows, and it was off to the races. So there's an inflection point you want to keep an eye on. The other one is if you break this downtrend line off the September highs to the upside, you better take notice. So the other interesting thing is draw a line across 560. There's resistance. So it's no wonder it stalled at 560.
Okay.
So I think it's worth watching. It's a great name. I like it. It's just a matter of, where's it going to stop going down?
Okay, Lululemon, and boy, some of these retailers have just been blowing things away. This stock did have some good earnings, a rally, up a little pullback, a little stall here. What do you think of the maker of yoga pants?
A little short-term extended. Just made a run from 42. Right away, I pull up a chart and I look, boom, 42 just sticks out at me. Ran from 42 right up to this 46, where you now have some overhead supply up in here. So, nice move. That's, just shy of 10% in months to date here. So, but right now this is kind of a resistance zone. So let's see, for me anyway, I'm looking for an issue that hits a level, pulls back off its highs in an orderly fashion, and then takes off to the upside again.
Okay.
So for me right now, I'm just not seeing anything that's going to
Jump out at you.
force me. Yeah, it just doesn't jump. Good point.
I would say, if you're looking for, I see the 42 that Harlan's talking about. If I was trading this thing and looking at it, if it got down below that two lows, 44.15 and 44.24, that's a double bottom there. I don't know. I may want
Yep.
to reevaluate my long position. You know what? This is something that we haven't asked you about for a long time, but what about this move in Yahoo? Can you give us any of the technicals on Yahoo?
Extended. I don't even have to look at the chart. It's vertical. Just look at BABA and you'll see the same thing, because obviously it trades in tandem with BABA. So, where's support? This thing is trading just vertical here. And, it's been a good ride. If you've been there, hey, hats off to you. But by the same token, you're trading off of an accelerated move in the stock. Yesterday's lows just happened to tag the 10-day moving average. And if I'm not mistaken, BABA did too. No, BABA hit the 20-day and started to get a lift off of it. So for right now, if you're looking at Yahoo and you're in it, depends on what type of moving average are you going to use to manage this accelerated uptrend. If it stays as, if you're going to use the 10-day moving average as your guide, as long as it stays above the 10-day, you stay with it. The moment it breaks the 10-day, you may want to say, you know what, it's been a nice ride. I took this thing from, 36, 40 to whatever your zone is. And it's been a really nice ride, but it is extremely extended.
Hey Harlan, it's Brianna here. I'm glad you brought up Alibaba because that was something that I wanted to ask you about. We've only got you for a couple of minutes left, but we've seen Alibaba kind of dropping since last week, and I was actually talking to a Wedbush analyst yesterday who said he thinks it's happening because a lot of people are short selling it. Do you have any thoughts on that?
I think it's kind of hard to find stock to short. It's one of those names that, when you get these names that go into this acceleration to the upside mode, it gets really hard to find stock that's available to short. So, I haven't checked into it to see if, stock is available easily. But, that could be part of it, like you say. But, the stock really got extended. It broke out at, 100, ran up to 120. One could say it put in a little double top there, and that was all it wrote. So, 100 to 120 months to date, let's just say, that's a 20% move, in a very short period of time. So, what's not to like about that big move? You got to sell your peanuts while the circus is in town, as I always say. So there you have it. So I'm looking at it. Where's support? Nice support at $100. Could it go down there? Yeah. Will it? I don't know. But I do know that as long as it's going down, I'm not going to touch it. I need to see, for me, my discipline is I need to see a support level tagged and defended. And that's the only major support level I can see because of such limited history, and that's at $100.
All right, Harlan, well, we've only got you for about a minute left. Any final thoughts for the day?
Hey, I think you just take it easy in here. The market's had a nice little run here. We're trying to consolidate and digest this run, and the way you do that is two ways. You either go sideways through time, or you pull back in price and look for a support zone. Next week is holiday week. We typically have an upward bias into the holiday, and it's just a matter of, are we going to go down for a couple of days here, and then you get your into the holiday type of upswing. So, but pick your points. If they hit those points and you're looking for names that you like, that you don't have to chase, you're starting to see that. How many people had to have BABA at 115 to 120 because, it's going to the moon, and, I'm out of fear of missing it after they've already missed it, they end up making a mistake because they're chasing an extended stock. So let them come to you. Take your time, look where supports are, and if there's a name you like that's taking support, that's what you want to start to hone in on.
Okay, we've had Harlan Pyan on, co-founder of All About Trends, talking about his mode of technical analysis and how he follows it both on the upside and downside. Harlan, as usual, thanks for coming on. We'll talk to you again next week.
You betcha. See you later, folks. Thanks.